Arlan Suderman joining us this morning from StoneX Financial. Arlan, good to have you with us. Let's begin with what we're seeing in crude here. The rally this week back above 80 in the WTI, tied to, well, it appears to be geopolitical tensions.
Yeah, it's tied to geopolitical tensions, and certainly we're seeing that in the Middle East, but there's other factors at play as well. Now, ironically, this comes on reports that Saudi Arabia is planning on cutting prices for its Asian customers as we get into July, but yet crude oil prices are moving higher. And I think that says that we're talking about more than just supply and demand fundamentals here. We're talking about reinflation pressures as well that funds are looking at and want to own the hard assets. And when we look at treasury yields, also at 4-week highs today, just as crude oil is, I think that kind of tells our story that we're looking at right now. And then we look at what wheat prices have done. I think wheat is one of the most intriguing commodities out there right now, not receiving a lot of conversation, that could really see prices explode if we continue to be dry in the Black Sea region into the month of June. And that combination could really push the commodity prices higher. As we look at our StoneX commodity tracker, it is tracking now for the basket of commodities at its highest level since late 2022. And so overall, we're seeing this belief or this mantra that we're seeing reinflation pressures come back. The funds are flipping from the short to the long, and crude oil is party to that. Now, we've talked about a lot of supply and demand fundamentals. You see the IMF raise its growth forecast for China, raise its growth forecast for India, two major consumers of energy going forward. That's certainly supportive. Overall, we're seeing a more resilient economy here in the United States. We're getting into our peak driving season now. A lot of factors going into play. We're seeing some reduction in the rates of investment now in our crude oil fields to build new wells, to drill new wells. So factors coming into play.
Quite the bullish narrative there you just painted, and I like the focus on wheat. We've been keeping a close eye on that as of recent, right, with the rally we've seen coming back into play. And again, Arlan, I agree, all of this feeds into some of those concerns here in terms of inflationary pressures. But it sounds to me like you're kind of looking at this from a similar angle as some of our other guests have, as we're in the midst of a bit of a commodity supercycle.
Yeah, a little bit. It looks like we're moving that way. It hasn't been confirmed yet. As we look at wheat prices, it has potential to have a similarity to what we saw in 2010, where we doubled the price of Chicago wheat futures in 5 weeks' time based on a drought in Russia. Will we see a repeat of that again this time around? I don't know. That's yet to be seen. June is the critical month for growth of wheat and development of wheat in Russia. But we've seen this dryness now expand over 50% of Russia's wheat belt and now over all of Ukraine's wheat belt. That area combined accounts for 33% of world wheat exports this year. Meanwhile, we've been seeing wheat supplies, a staple food commodity, decline for the last 5 years. 53% of those world wheat stocks are in China. Will never be a part of the world trade. We've been seeing basically major exporter supplies trending lower and getting rather snug. But the market hasn't been focused on that because Russia and Ukraine have been funding the war by dumping record quantities of wheat onto the world market because they've had bumper crops. All of a sudden, that production has been curtailed, and we're seeing combined production now drop about 12 to 13 million metric tons over the last 30 to 45 days of prospects for this coming growing season. And if we drop below a combined production of 100 million metric tons for Russia and Ukraine combined, that we see as a pivotal point that we could impact world trade patterns and start getting the market excited. Now you throw in the fact that Reuters is saying what we've been thinking for some time, that India may lift its import tariffs, 40% import tariffs on wheat this year, and they may need to import 3 to 5 million metric tons. Russia being their primary source, and all of a sudden you're starting to rearrange the wheat trading routes, and you have the market starting to say, what are alternatives? Where's that wheat going to come from?
Well, you've given us a lot to watch here in terms of wheat prices here. Again, back up into the $7 level. I'm looking at the highs from, it looks like July of last year, up around, we'll call it, just shy of 8. So lots to focus on here. We're not from that level. I'd imagine if Fed Chair Jerome Powell was listening right now, he'd be a bit frustrated to hear all of this, Arlan, right? I mean, this is not feeding into the direction he wants to see things going.
Absolutely not. And the more they talk about cutting rates, the more that talk stimulates the economy and makes it difficult for them to cut rates. And we've been saying for 6 months we didn't expect any rate cuts this year. If there are any rate cuts, it might be one because of just pressure on them from Washington to cut rates. They don't want to be seen as political, but they're facing tremendous pressure. Whenever he's in front of Congress testifying, tremendous pressure to cut rates. And that will simply create even more problems because all it takes is talk of rate cuts and consumer sentiment pushes higher. We talked about housing. Your previous guest talked about housing, the shortage of housing, about 2.5 million units in this country. So every time we do get a reduction in rates, we get a surge in demand. So housing prices are not going down. And there's some indication now that we're going to see shelter costs reignite and go higher once again over the last half of this year.
How about metals? What are you looking at? I mean, gold just recently off an all-time high, copper for that matter, tying into some of the topics we've covered, right? China, housing here in the U.S. ultimately. What stands out here, Arlan, for you?
Yeah. As we look at the metals, gold in a correction right now, certainly I think longer term we're still intact. You mentioned copper. We've always tied that in the past to economic growth, and especially in China and how much development they would have. And that's still true. But now with artificial intelligence, copper is in demand for that as well. And of course, we've seen what's happening with NVIDIA stock and the enthusiasm and craze over artificial intelligence. And that just creates more demand for copper. And one of those industrial metals, again, that's part of our commodity basket and the reinflation of it.
Again, not what Powell wants to hear, I feel like, nor would this chart be one he wants to look at, right? Especially if it continues, if crude prices, wheat, and some of the other products we've discussed here continue along that trajectory to the upside. But Arlan, we're going to have you back in the near future to continue this discussion, look at wheat, and further our discussions here on the Fed. Arlan, appreciate you sharing part of your Wednesday with us here on the Schwab Network. Arlan Suderman, Chief Commodities Economist at StoneX Financial.